Welcome back, everybody. It is time for the week in review, and it is March 15th. We had an amazing week last week as we have been leaning short for 3 weeks, and we just absolutely crushed it the whole way down. And congratulations to everyone who took advantage of the trade plans. I know everybody who has been DMing me telling me that they were really happy about the levels, and as many people have continued to think this market's going to go up, we had it right. We're still pointed down, and we still are. However, let me just say this. I have reason to believe that we're going to come down much farther. The data says we will. However, we also have near-term data that says we should be expecting a pop. So we're going to go over all that, and I'm going to talk about a few things today. We're going to talk about long-term data, we're going to talk about short-term data, and then we're going to talk about VIX, SPX, and ES. We're going to wrap all this up into a real fast week in review, so hang on tight because this is going to be a lot of information. So let's get right into it. So on February 4th, I put out a post called 70% Warning. History says the S&P 500 will crash this year. This was very close to all-time highs when I put this out, and people thought I was smoking the pipe back then. But the data said exactly what would happen due to the midterm cycle. So 70% is not 100, but it is pretty darn good. If you were to flip a coin, I'll take 70% odds every single time. So with that being said, I went ahead and put a new post out today just to remind people of exactly what's happening here, as we are now 5% off the all-time highs. It's called the 30-year market pattern nobody wants to talk about right now. I suggest all you guys take a look at this. I will include the link inside this post for you to see. I just published it about an hour ago. It's certainly worth the read. Okay, so let's go ahead and get right into this real fast, because like I said earlier, there is a 70% chance that we're going to get a pullback of 18% this year. It has happened 12 out of 17 midterm cycles, going back 30 plus years of data. Okay, first and foremost, that's how big my data trove is here. I am pulling stuff way far back so that we can really get a pretty good idea from a statistical probability of what to expect. Okay, so essentially we have a 70% chance that we're going to pull back 18.7%. And check this out. So here is the stat that everyone should be planning for. Okay, the average max drawdown is 18.7%. However, what's interesting is the average year-end return is plus 1.7%, which means that we're going to pull back pretty good. But ultimately, we could rebound pretty nicely as well, which could set up a nice buying opportunity for all of us. So I wanted to kind of throw that out there for you and also give you a breakdown of what you can kind of expect and what it looked like for presidential cycles. And it doesn't matter whether it's Republican or Democrat or any of that stuff. It makes no difference whatsoever. These things always happen. Well, I say always, but 70% chance of this happening, which is pretty stinking close. And so this gives us a good idea of what we can expect this year. Midterms bring in a lot of uncertainty into the market. The market hates uncertainty, and then once they figure out who they're going to elect and they figure out who's going to sit where, the market kind of chills out a little bit and it rebounds. So certainly suggest that you guys take a look at this. This is some real interesting data in here. I have been harvesting data for quite some time, and so take a look at this. This will be very advantageous to you. So that was my long-term data. Now, if we pull back 18.7% on average, and so far we've only pulled back 5%, that means we still can come down about 13%, which is a pretty significant pullback. However, our short-term data suggests something potentially a little different for the near term. So I posted this on Thursday. And this is basically showing that with VIX where we're at in March across 30 years, that basically over the next 5 to 10 days, and this was on Thursday, so we've already had Friday was 1 day, right? And so now this is saying within the next 5 days, we have a 92% chance from Thursday's close being up 3.4% and a 100% win rate of it being up 5.7%. Now, that is the average, okay? It could obviously be a little less. And then, so let's go over here because this was the new one that I posted Friday. This is the one that I really want to focus on because this was the new data coming in on Friday, and it's based off of Friday's close right here at 66.32. So this is the 4th straight down day in March, trading below last week's VWAP. We've seen this setup occur 15 times since 1993, okay? So the next day win rate is only 73%, and it's a very small average of 0.67. And the reason why I think that I think we need to sweep the leg. I said this in Friday's post-market breakdown. I think we're oversold on a lot of technical indicators, but I think we need that sweep, and so we might get it as soon as tonight or even Monday. It'd be very interesting. Over the next 5 days, based on this close price, we have an average up of 2% with a 93% win rate and also 100% win rate over 5 days with an average of 4.43 up. Look at this, 15 for 15. Every single instance was higher 10 trading days later. However, keep in mind, even though 4% was the average, that would basically bring us back almost to all-time highs. I don't think that's possible. Let me rephrase that. I don't think that's going to happen because this is just the average. So as you can see right here, the worst gain over 10 days was plus 0.22%, which means it was still plus. Okay, either way you look at it, but that doesn't necessarily mean we have to hit the 10-day mean, which is 4.37 points, but anything could happen. Okay, as you can see, the best case was 11%. So my guess is it will probably be somewhere between 4% and maybe 2.5%, especially as we sweep this leg. But I wanted to bring this out to you because we have long-term data saying that we still can come down another 10 to 13%. We have short-term data basically saying, hey, listen, we're oversold across every time frame. It's probably time for a pop, right? So very interesting stuff here. And with 100% win rates, it's hard to ignore that for sure. So I wanted to bring this out to you. I thought this was cool stuff. You're going to see a lot more of this stuff coming out of Vici Trading Solutions and the S&P Edge as I continue to post this stuff. Really, I think this is valuable for me. It's valuable for you, and honestly, it makes it for a great talking point. So here is the weekly on ES. Look at this thing. I mean, just absolutely bombarded. We haven't seen a down weekly like this in the ES in quite some time. So before I get to ES, and the only reason I'm talking about it is because it was sitting on there, let's go ahead and just bring over SPX and take a look at what we have here. So I'm going to go ahead and come into the daily time frame. Actually, let's just go ahead and go into the weekly. So ultimately, guys, I think we are trying to get to this weekly low down here at 65.21. Now, is it going to make a straight line to get there? Doubtful. Okay, but ultimately, I do think we're coming down here, and ultimately, we could really be coming into the 6400s, if not lower, based on the data that we just talked about. But what I can tell you for sure is that we have not gained on any time frame. In fact, we are smacking from our big monthly level that we've been talking about for weeks. And this hit almost perfectly, and we are coming down strong. So we do have some support down here at 66.02, which it makes sense from just from a round numbers perspective, right? 6,600, right? And the next level of support is the 65.50s, which just happens to be 50 handles lower. Okay, so from a round number perspective, we got two nice numbers here to look at. And then obviously we're looking at this big, massive swing low that we talked about last week for a big pivot for us to be above below. So let's go ahead and take a look at the daily time frame here. As you can see, this was a daily as well as this swing low, 67.21. We stayed below it. We continued the momentum to the downside, just absolutely just getting crushed right now. However, this is a massive leg in. This is the leg that took us to the all-time highs. This is a very large spot, okay? So I do expect some potential support in here. It wouldn't surprise me to move down and then sweep underneath. And the ES looks slightly different, but to hit these particular areas here, on ES it would be a sweep of a leg low, and then we can continue to traverse higher. And again, I think the same thing will happen once we get under here as well, and then if they get back above the 65.50s, we'll cruise a little higher. But we're going to keep an eye on SPX right around our $6,600 handle. If they play this and get back above 66.17, we could definitely squeeze much, much higher. And, we have some untested areas up here. We really do. So we'll get into that here a little bit shorter. Actually, we'll get into that later this week. That's really not my main concern right now. I just wanted to show you SPX and kind of the areas of support and what I'm looking for potential areas. But ultimately, I am targeting new lows underneath 65.21. So that is that. All right, so let's go ahead and take a look at VIX now. I'll pull that over for you guys. So VIX, we talked about VIX for a while now. And guys, this is a $4 for data for SPX and VIX on TradingView. Highly recommend you guys spending the $4. I use this thing constantly as a tiebreaker and understand where we're going, and it helps significantly. Okay, so for $4, you can't beat it. This is our big monthly level right here, 2470. We have been playing above, below this for some time. Even on Thursday or Wednesday, they popped it. They came above. Then Friday, and then actually on Friday, I believe it was Friday, we smacked, or Thursday night, we smacked this at the open. We've been drifting down, and then once again, of course, on Friday, they played our 2470 perfectly. Okay, so here's our big above, below for us right now. let's just call it $28.41 or ultimately $29. And $29, just to let you know, it came from this massive swing high over here. This is a big peak for us to be above or below. As you can see, when they punched above it, they really went. So I'm going to use this as a little zone. Just call it a 50 cent zone right here. That as long as we can stay above this, we're gonna continue to get a lot of suppression on the ES. And ultimately, it really comes down about the 24.70. So if we stay under here and start to come down, we could get a little suppression. But ultimately, underneath 24.70 monthly, we start to come down pretty fast in VIX, and the indices will pop up pretty good. Now, I do have an untested area still on VIX, which is the level I was looking at to play last week, which obviously it got missed. But watch out for this 23.43 weekly area here on VIX. I do believe we could sweep down, get a play on this, and start to break higher. And that may be all that we get for the little pop that I think may be coming. It's hard to say. But if we push below the 23.43 weekly, the indices are going to continue to push higher and higher until we get down in here to our $20 handle once again, which, guys, as you know, who've been trading with me for some time, I mean, we've been talking about the $20 handle till I'm blue in the face. So right now we're really just going to stick with the above the 28.40s. Keep an eye on the 24.70 for our main above below pivot, and then this is our main below pivot at 23.43. We really want to see this hold if we're going to have the indices come down any farther, and if not, if it comes below here, let's ride the wave to the upside. All right, so that's what I got for VIX. That's what I got for SPX. So let's go ahead and take a look at ES now. Let's get right into the goods, what we're actually trading here, and I'm going to go ahead and pull over as usual the profile for the week, as this says a lot about what's going on here. So as you guys know, we actually nailed this last week. This was the exact low last week, which was the 65.85 weekly value area low. This is where I think we're coming to sweep. I absolutely think we're going to sweep this area and come back up. This is going to be very important for us once again. And when I show you guys, you'll see it. You'll see it again. I'll show you. This was the spot. This was the really juicy spot. So I have a feeling that we could get a sweep underneath this area and hold and reclaim back. We actually moved pretty significant last week. As you can see, we moved 154% of our average, of our 10-week average, which was a really impressive move. And we did most of it by the beginning of the week, which was pretty wild. So yeah, it was just an insane week because we had a massive push up and then we retraced it basically. So it was just an incredible way to go up and test the highs and come back down, which we've talked about many times. We talked about in the post-market breakdown and also in the trade plans. And so here's the deal. Here's one thing I wanted to point out, and I really thought they were going to push above this on Friday. We have this massive area here, and we have this really large inefficiency that needs to be filled in. This is a ton of buying. I really thought when we got above this that the buyers would continue to carry this through on Friday, and they were just unable to get the job done. So with that being said, guys, here's what we want to take a look at. We have some untested areas essentially right here. This is our major resistance on the profile, which is right around 67.20. If we push above 67.20, we will start to come fill this in, and we would be targeting this upper range area at the 67.77. This area should be familiar to everyone right now. This is a huge spot that we played above below this week on the way down and on the way up, and so we will kind of keep this area in context, and above this we continue to move higher. Below this we continue to stay suppressed, and ultimately below the 67.20 it stays even further suppressed. Okay, and we're going to get into that as we get into the candlesticks, and I'll show you guys what's up, but I just want to show you below here as well what I'm looking at. We could eventually sweep this low, which I do think is in the cards at some place pretty soon, maybe even after our little pop. And here would be our next area of interest, which is the September 7th weekly value area low at 65.10. And it shouldn't surprise anybody. These are round numbers, guys. I mean, I didn't make this stuff up. I just pulled it out and I see it. It's just kind of how it works. So, this a lot of psychological numbers going on here as well, as you can tell. So that's what I got for the profile. We're still continuing to move down. We are still in this massive value area here that was a biggie. And I do think we're going to come down and eventually fill the rest of this out in RTH as they hit it in the Globex session prior and popped us all the way up. And so now we're starting to come down and really kind of check this area. And ultimately, I do think we'll come down and even lower. But, we'll play it one step at a time here. Okay. Oh. Pardon me. All right, so let's go ahead and get into the candlesticks here, show you guys what's cooking. So as you can see, the weekly is just getting absolutely nailed. We are in some significant support right here, which is our big weekly leg to the all-time high. It is very much tested, okay? So I do not expect this area to hold. However, we're going to be using this for above-below context because it's just that important. Okay, and then this is a ETH weekly at 95 that played prior in the Globex session when we actually came down and played that spot that I was telling you about that I think we still need to fill in. So we're going to keep an eye on this as well. This is going to be a great above-below pivot for us, the 65.95, and I'll show you that more when we get into the lower time frames. Okay, so let's go ahead and get rid of that. So here is really where I think that we're ultimately headed from a weekly time frame. I think we want to sweep the lows here at 65.39, which is the RTH daily leg low, and then the ETH leg low is 65.25. And I know that you're probably like, well, why is it different? Well, one, it was lower in Globex. That's basically it. So they just didn't get as low in the cash session. But the true sweep would be 65.25, but the cash session recognizes it at 65.39. And so when we get into the candlesticks, I'll show you again where we'll get back into that. Okay, so just wanted to show you where they were coming from, where they were derived from, and then we'll go from there. So here is the daily time frame, guys. We are still coming down. This is the big area that we are above below. We've talked about the 33.27 multiple times. This is going to be a big push down for us if we get underneath here, as this is ultimately the support that took us up. Okay, so a push below here, an open below here would be really bad. And as you guys know, on Thursday on the post-market breakdown, I talked about how we closed below the 66.81. That meant we were fairly destined to make new lows on this leg, and they did Friday at the close. This was a very gruesome close, and it would not honestly surprise me to see some follow through off of this in general. Okay, this was the target, as you guys know. I was talking about the target was the 66.40, I believe, leg low or what have you. Anyways, it's done. We hit it. So the next area that we're looking at for support, for resistance, we have 66.81 on the daily time frame. This is going to be big for us for above below. If we get above 66.81, we come into this massive cluster here, guys, and this is thick with resistance. Okay, so this is going to be a big pivot for us to watch for above below. We actually have some 4-hour levels right above that I'll get into here in a little bit, but from a daily perspective, this is what we're watching. The other side is 66.33 and the weekly at 27. More than likely, we may even just open up below this here in 45 minutes as we continue to push. We'll watch this 65.90 or 65.95, excuse me, but really this is where we're looking at. Okay, 65.40s, 65.25s. We want to get below this area. There's a daily at 65.33.50, and then that's tested, and then we have another one that's untested at 65.16.75. I am really looking to sweep this leg, and if we sweep this leg and we start to reclaim this daily at 33 and then the other daily at 57, I mean, this thing could squeeze super duper hard. It'll take us all the way back to at least 33 and I'm thinking 81, and maybe here at 72, if not all the way at 68.59. You guys saw those statistics. We are oversold on every single indicator out there, and so we just need to find some liquidity, and until they do so, we're not going to pop, but we're getting super close to the leg end. We're only 100 points away, a little less than 100 points away. I know that it sounds like a lot, but it's not. We have been moving an insane amount of size lately. You can see right here, we have been moving, our average ranges are 125 points a day, and on Friday we moved 112. This is literally 1 day's worth of movement, if not the overnight session. It's hard to say, well, we're open. More than likely, we're going to gap down. I don't know that, but just with the shitty close on Friday, it wouldn't surprise me at all. So keep an eye on these levels down here. That's what we're going to do when we open up. I personally won't be trading the session unless we have already swept and come up here. Then I'll have to be tempted to get long and just hold a swing for a little ride back up. So that's my thoughts here on that. So let's go ahead and get into the 4-hour, show you guys what's cooking here. Guys, as you guys know, and this is going to be super clear for you, we talked about this 66.59, 68.57, 68.59 monthly, weekly area. God, how many times did we talk about this? And all they did was come down here and play that value area low and that weekly at 55, and they popped all the way up to the highest untested and now they're coming all the way down, and they want to sweep this leg at 65.84. This will never go back up unless they sweep the leg, because the buyers couldn't get the job done the first time. They sure as shit aren't going to get it done the second time. We need to sweep the lows to get some liquidity, and that is what I'll be looking for. If they end up playing this 65.60 spot and get back above 83 here, we could squeeze. And ultimately above 33, we're going to squeeze at least to 81. Okay, we've got an untested 4-hour here that I actually really, really like, depending on where we open, at 67.10. Right, we'll be talking about this Monday in the Discord room, depending on where we're at. This is a great 4-hour leg down. I love this spot, for real, for real, for real. I would love to not sweep this leg, pop up here, play this, and go. Okay, and then really, because once we get back underneath 66.81, momentum is strongly in our favor. Okay, so again, we've closed below the 66.33. This is technically resistance now, and we could come lower. Yes, we do have the 66.11, but I wouldn't count on it doing too much. We will see what happens. Okay, and I'm going to go ahead and just zoom out a little bit to show you guys, and I know this is it's kind of squeezy here, but the thing is we really, and I'm just going to kind of, let me stretch this out a little bit. I'm sorry that it looks the way it does, but you'll have to bear with me here. So this really is what we need to get underneath. And we've got this cluster of untested goodness down here. If they sweep this leg low, this is worth being patient on, right? They sweep this leg low, get back above the low, and ultimately 33, 39. This thing's going to squeeze nice, right? And so, but I do think it is possible for this 65-60 area, even though it's technically quote-unquote tested and nothing has been gained. I do think this is a possible catalyst for a pop here. If they play this and get back above 84, we might come back up to like something that we can smack and play for a short. Okay, I do think that's possible, and that would kind of reaffirm our oversold bias as well. But I mean, really, the best play is the sweep underneath here and go. So that is what I got, guys. I'm not going to try to take it out too far. I didn't even chart too much farther underneath this, as you can tell. I will show you kind of some supports here, but I'm not going to talk about it if we get into it. We'll just kind of show you what's up. This is the spot I was talking about buying. I do have a spot at 64.83. If they play this 4-hour and get back above the daily at 64.8850, this is an absolute long. This would be a squeeze for sure because they double tapped it. They play it, get back above it. Down here, I got a 4-hour at 64.40. And then I've got this far down leg low, which I like. I have the 64.13 that to me is a quote-unquote watch, but even a little lower here. What is this? 63.97 4-hour, 63.92, and I don't know what that daily is. I got it covered up. Let me look here. 63.9825. I actually like this daily a lot. Let me just show you where it's coming from on the daily time frame. I think it's pretty sweet. So this is the one I told you I'm not super excited about, 64.13, but I like this 63.98. I like it a lot. It was the lowest untested on this massive move up. There's some 4-hour confluence in there. This is going to be a good one. And again, look at the number, 63.98. We're basically 6,400, right? Round numbers, people, round numbers. It just so happens that they always work out like that. So again, I'm not, a round numbers guy. I'm a levels guy, but if it lines up and it has a little psychological instance to it, then why not, right? So just keep an eye on that, keep a look for all that goodness there, and that's pretty much what I got for you guys. So, not to beat a dead horse, but make sure that you check out the post that I just put out. It's very important for everybody to understand. I will also include the short-term long bias tweets in this so that you can check it out, but definitely read the long-term bearish post. Dude, guys, if you're really trading for income, if you're really trading for real, you need to know statistics. This isn't a game for me or hopefully for you guys. You don't just get in here and you go, I think it's going up today, let me buy. That's retarded, right? And so that's not how hedge funds make money. That's not how real traders make money. It's all based on statistical probabilities. And honestly, your process should be the same way. And if you're following my process, it is. We know with a statistical probability that the edge is in our favor. So I look forward to actually conquering the markets with you guys this week. It's going to be a more volatile week. Again, I think we're going to get both downside and upside plays this week. And so keep our fingers crossed. I will see you guys Monday for the post-market breakdown. And then, of course, on Tuesday, the trade plan will be in your inbox at 8:30. And I'll also include the string for TradingView in this particular in this particular post so that you guys can add it into your TradingView indicator, which is brand new. And if you don't have it, certainly download it. It's free. Go to Ryan Bailey Edge on TradingView, download this indicator, and get it for you guys. And then you can plug these levels right in. So have an excellent, excellent Sunday. I will see you Monday, and together we'll conquer the markets. Cheers.